NDTVProfit.
Welcome back. You're watching Opening Fire right here on NDTV Profit. The Nifty for itself holding up above 4,900, so a good 1% higher on the upside. Strength coming back into the rupee as well. Now at about 54.23. The Sensex also higher by 165 odd points. The momentum, at least at the start of the day, seems to be on the stronger side. Goes to see whether or not we can carry this on forward over the next few hours of trade to come. But one stock in focus then, and Blue Star came out with its numbers and posted a loss this time around. Let's go across to the management to find out how the quarter has shaped up and what's the outlook like going forward. Thanks a lot for joining us, sir. Let's start off first, with your overall top line, bottom line this time around, and what are the projections that you would make going forward?
Good morning. Devina, good morning.
Good morning. Good morning, sir. Go ahead. I was asking about the highlights of the quarter.
Well, it's the same as what it was the last quarter and the one before that. And I think we told you both the times that this is going to be a bad year. It's going to be a few painful quarters, and that's what's been happening. So no surprises, but of course not a good thing that we got into. I think we need to keep this, get this year behind us. The total for the year is about 89 negative over a profit of the last year. I think we explained already what the reasons are, mainly some overruns in our projects which were booked earlier, and we have made corrections. And of course there was also the forex and interest cost which went up, but that was not as bad as the downturn we had on the contracting business. So that's generally what happened. And going forward, in fact, by the way, last year, while that happened, we grew well on the product side, especially the room ACs, more than 25%, more than the market. The market actually degrew. The refrigeration business grew well. The service business grew well. So there were a lot of positives there. But overall, because the contracting business that is segment one for us, is large, as a percentage of what we do, it obviously affected us. We've been little, in the last quarter, took a little more of a hit on the correction, shall I say. We've been a little conservative on providing for some more debts so that it's, taken care of. We were not sure of some project which looked a little difficult to us. But a lot of corrective actions, a lot of changes since almost now 8-9 months. The order book, which we started putting in from, say, July, August onwards, has been good. It's a healthy business that we carried forward. The problem, of course, is that we do have some part of the old order still carried forward. So we are going to have a mixed bag. Okay. But the war cry for this year is very clearly getting back into profits, and that's what's going to hopefully happen.
Right.
I'm hoping there's going to be no disaster out there in the marketplace, because sure, right now it's not looking very exciting out there, truly.
No, completely understand that. So let's just put the year behind us, FY12, and what we've done here.
Absolutely.
Talking FY13 now, margins which were looking a little bit sluggish up until now, do you think things substantially will change on that front? Probably a better pickup in the order book, because we've seen that the order backlog has also dropped by about 2% compression on the margin front. The EMP side, the EMP segment has been the major drag this time. Will things change out there on that front?
Some of it is deliberate. We decided to put some new rules on how orders will be booked. The terms of payment, the margins, we put on some new conditions, which was the part of the healthy correction that we did. So we chose to degrow on our contracting side, but it's not something that. So on top of that, the market hasn't been very exciting. Mm-hmm. But I'm saying in spite of that, we decided that we will not. We'll be conservative. It's not growth at any cost. It'll be growth if it's profitable and with positive cash flow. So this we are very clear about. On the product side, as I mentioned, actually our growth has been good last year compared to what the market conditions were. Answering for how things are going to pan out this year, on the contractor side, we continue to remain, shall I say, conservative on how we will book orders. We rather give up jobs which are not looking profitable and where the cash flow from the customer side is not looking healthy and not get stuck in some of these projects which then last for very long, and then they sort of get our cash flow into trouble. One of the things we did, by the way, last year is to get our borrowings down tremendously. It was at a peak of 600 crores. I did mention last time we are attempting to bring it down below 400 crores. I'm happy to say we got it below 350 crores actually. And in fact, I allowed in April a little bit of correction so we could pay off some of the requirements for this summer season. So that's how it's panned out. And on the rest of the products business, refrigeration, room air conditioners, there has been a bit of a slowdown, even from the outside world. I think the summer wasn't too good. The industry thinks there may be a degrowth. It looks like for the last 10-15 days, summer has kicked in everywhere. Otherwise, there was, I think, rain here and some winter getting sort of extended. So the market did not grow as expected.
Right, Mr. Jamdar. Pleasure.
We are growing also, pushing ourselves into smaller towns because a lot of growth is happening in those areas. And we're sort of addressing those markets.
All right, Mr. Jamdar, hope the next year proves to be much more better. Thanks a lot for joining in and best of luck for the coming few quarters. That's the management of Blue Star talking about their quarterly performance. FY13 hopefully turns out to be better. The stock's down about 5% in the session. Taking a very short break on the other side.